happening in the investment world and where people should be thinking about putting their money. But let's get to that in a second. How should the public think about the disconnect issue?
The disconnect between how the market is doing and what we've seen in Washington? Is that the question?
Yeah.
I think, I asked Bill Miller this question yesterday. We had a great conversation with a bunch of value managers, and Bill said something that I thought was really smart. He said nothing changed in terms of the market outlook yesterday. Nothing changed in terms of company profits yesterday, earnings, nothing changed. That's now a couple days ago. But I think that point is the right point. The market, anticipates the future. And in looking at the future for American businesses, global businesses, despite the travesty that we saw, the images that are hard to forget, that I never expected to see in my lifetime, despite all of that, in terms of the underpinnings, the foundation of the U.S. economy, nothing changed.
So when you look out, you look at the companies that have done well in the markets, clearly the growth companies have been the great winners of this last 6 months, this last year or so. And people keep talking about value, that there's going to be this moment where you've got to get into value. You think now is that moment?
I think now is that moment. So first of all, growth has trounced value for 13 years. It has been unbelievable. But the pendulum has swung way too far. When you just look at all of the stats, everything from the multiples on the market to the kind of outperformance we've seen for growth stocks recently versus the historical norms that we should expect, we're in nosebleed territory. We've started to see a crack in the fourth quarter and in the early days of 21. And I think we will see that continue with value starting to take the lead. Value should do better in a recovering economy. We looked at 14 recessions since the Great Depression. Value outperformed in every single one of them, every single one across all sectors. It tends to do better when profits are rising, when rates are going up, which we anticipate at some point will happen. So I think value's days, better days are ahead for value, and the wind will be out of the sails for growth, especially if you see rates rise.
Do you look at this, though, as a great rotation, meaning that the growth stocks lose to the benefit, if you will, of value, or that value just starts to emerge as a more popular class, if you will, of investment?
That's a really good question. On the one hand, I'm concerned about some names just don't make sense. I mean, the one that we talk about so much is Tesla. The valuation, the market moved last year over 700%. It literally having a market cap bigger than the entire auto industry. There is a disconnect there where you say there's probably a crack ahead for some of those stocks that are just in heady territory, but they don't have to break for value to do well. And I think that's your point. You could continue to see the overall market do well, just growth not do as well as value will do in this next phase of economic recovery.
We keep talking about value, but let's just break it down for the viewer. What kind of stocks are we talking about? What kind of companies?
Well, we're talking about a lot of companies that have been orphaned in this current environment, especially, and it was interesting when we had this conversation yesterday with some of the greatest value managers around, like Mario Gabelli, like Bill Miller, like David Hero, like John Rogers, that their point was that they probably would see more leadership among small cap value than large cap, because small cap stocks have also just been trounced in the last decade versus their large cap brethren. And so there are a lot of names out there. John was a big fan of Nielsen. He talked about some of the media names that still haven't done very well. And that's an example of a stock that has been left behind but has a lot of opportunity ahead of it. There have been some smaller names that have had a big move but still believe that they could still do well, names like KKR and Lazard. So I think that there's a lot of opportunity because so much of the market's attention, as you know all too well, has been on the FANGs and on the big guys and on the growth stocks.
We keep talking, we've been recently showing the bank stocks, which have been on the rise. Part of that has to do with what you were talking about, I think, which is the prospect of what you think the Fed may or may not do. My question is, when do you think the Fed is actually going to move, if they're going to move at all?
I don't know that answer. No one does. However, what I would say is we do think that there'll be more demand on a going forward basis in terms of this economy. And I think because of that, you may see more inflation sooner than what the Fed has stated in terms of this 2-year period where they would be keeping interest rates low. We're anticipating some kind of consumption boom. People have been locked up for so long. The savings rate for the typical American is higher than it has been. So there is money there, despite, again, the unevenness in terms of where there is true devastation in this economy in terms of lower income individuals. But this consumption boom could lead to, again, more inflation than we anticipate, prices going up, pricing power being there, and ultimately the Fed needing to move.
I'm curious, and I don't know if you asked that you put this great group of luminaries together, what everybody thinks of Bitcoin. We've been talking about it virtually every morning now for the past month and a half, just because it's been remarkable, like Tesla in that way. We're now over 40,000 this morning.
So the one Bitcoin holder was Bill Miller, and he was the one who said that, he believes it is a state-of-the-art breakthrough in terms of just the system itself, and thinks that it is, it has legs. And he was the one who was most bullish on Bitcoin. The others had no opinion. I probably would be less excited about it, but, that's what makes for different portfolios.
What was the biggest surprise that came out of that conversation yesterday?
The biggest surprise for me was there was a lot of